Look, let us be completely honest with each other for a second. Grab your coffee, sit down, and let us look at the massive elephant in the room that the mainstream financial media is completely lying to you about right now. You are sitting there working your fingers to the bone, trying to save every single extra dollar, skipping your favorite nights out, and faithfully funneling your hard-earned money into your retirement accounts, thinking you are doing everything right. And then you wake up to the news that Elon Musk is preparing the largest initial public offering in human history, valuing SpaceX at a staggering $1.75 trillion. The media is cheering, the internet is losing its mind, and everyone is telling you this is history in the making because SpaceX is supposedly worth more than every single American defense contractor. Combined, they are telling you it is worth more than the entire market cap of Coca-Cola, McDonald's, Disney, Nike, and Starbucks, all mixed together, and even worth more than the top 10 giants on the London Stock Exchange combined. But here is the absolute kicker. Here is the dark, ugly secret that nobody is screaming from the rooftops. Who the hell do you think is actually buying SpaceX at a ridiculous $1.75 trillion valuation, when the combined company is literally losing $5 billion a year? The answer is you. Yes, you heard me completely right. Within a few short weeks, your retirement account, your 401k, your index funds, your passive investment vehicles are going to become one of the single biggest buyers of SpaceX stock, whether you like it or not, and whether you think it is a good investment or absolute garbage. And that is not happening because you logged into your brokerage account and clicked buy. It is happening because NASDAQ quietly introduced a brand new, highly specific rule behind closed doors designed exactly to make that happen. I get it. You might be thinking, wait a minute, how can they force me to buy shares of an unprofitable company at peak valuation? And why does this even matter to a regular person just trying to build wealth? Well, it matters because a nearly $2 trillion valuation only makes any sense at all if SpaceX is actually the exact business that the general public believes it to be. But here's the deal. It is absolutely not that company. If you walk outside right now and ask 10 random people on the street what SpaceX actually sells, most of them will confidently say rockets, and a few sci-fi fans will say missions to Mars. But both of those answers are dead wrong. SpaceX is not just a rocket company, it is actually three completely different businesses stacked directly on top of each other. And the glamorous rocket launching business is not even the most important one, or the one that investors actually care about. There is a good, a bad, and a deeply ugly side that comes with this massive conglomerate. And trust me when I say it gets incredibly ugly. So let us start exactly where the rot is. Let us talk about the part of SpaceX that gets the absolute most public attention but creates the least amount of real financial value, which is XAI. Now, most people know Elon Musk for owning the social media platform X, which used to be Twitter before the rebrand, but XAI is the artificial intelligence startup he founded in 2023 to aggressively compete with OpenAI and Anthropic. A few months ago, SpaceX quietly acquired XAI in an all-stock deal that instantly valued the combined monster entity at $1.75 trillion, with XAI itself accounting for $250 billion of that total number. If you were wondering how it is legally allowed for one of Elon's private companies to casually acquire another one of Elon's private companies using shareholder equity, the real answer is that the corporate governance rules are completely broken, but it happened anyway. So, with a shiny $250 billion valuation on paper, you would naturally assume that XAI is a rock-solid, financially stable company with incredible products, or at a bare minimum, that the genius engineers who built the system are still working there. Well, I hate to burst your bubble, but absolutely none of those things are true, not even close. XAI was originally founded with 11 elite co-founders, researchers, and top-tier engineers handpicked from DeepMind, OpenAI, Google, and the University of Toronto, which was a true heavyweight world-class team. But by the year 2025, the company was burning through cash like an absolute furnace, lighting more than $1 billion a month on fire just to train models and keep the servers running. And by March of this year, every single one of those 11 original genius co-founders had completely walked out the door and quit the company. Then Elon, on his own social media platform, publicly admitted that XAI had to be completely rebuilt from the foundations up, which is just the polite, corporate way of saying the CEO of SpaceX just paid $250 billion for a broken asset that needs to be rebuilt entirely from scratch. To say that XAI is drastically overvalued would be the massive understatement of the century. Look at the actual math, because numbers do not lie. OpenAI generates around $24 billion in annual revenue right now and is valued at around $850 billion, while Anthropic generates over $30 billion annually and sits at a valuation of around $400 billion. But XAI, which barely estimates $1 billion in revenue, was just valued at $250 billion in this merger, meaning the market is pricing XAI like it is a luxury global airline, but in reality, it is operating like a budget airliner with a broken engine. I like to look at XAI as the reverse central bank of the SpaceX universe. Instead of printing cold, hard cash, it systematically burns whatever cash the rest of business manages to generate. But remember, XAI is only one of the three businesses inside this massive $1.75 trillion machine. The other two businesses are the ones actually doing the heavy lifting and making real things. Before we get to the actual crown jewel, let us look at the division that gives the entire company its famous name, the rocket business. This is the part that everyone pictures when they hear the name SpaceX. It is the Falcon rockets, the Starship, the historic launches into orbit, the satellites for the United States government, the cargo missions to the International Space Station, and crewed flights for NASA. The rocket business at SpaceX generated roughly $4 billion in total revenue last year, which sounds incredibly impressive to the average person until you actually hold it up against that $1.75 trillion valuation. Then, all of a sudden, it sounds completely minuscule, especially when you realize the actual rocket launching business represented only about a quarter of SpaceX's total revenue last year, which brings us directly to the third business, the one that most everyday consumers do not think about when they see a rocket launch, but it is the exact entity that institutional investors care about the most, and it is the one that is single-handedly paying the bills for everything else. This is the true crown jewel of SpaceX called Starlink, which is a satellite internet provider. It is basically the answer to the wild question: what if we built a massive telecom giant like Comcast, but put the entire infrastructure out in space? Which sounds like the kind of random tech idea a venture capitalist tweets at 3 o'clock in the morning, except Elon actually went out and built it. Starlink launched its public beta back in 2020, and just 6 years later, it has officially become the fastest scaling telecommunications company in human history. There are now more than 10,000 active Starlink satellites floating in Earth's orbit, constantly beaming high-speed internet down to a little tech dish sitting on a customer's roof. The dish automatically points itself at the sky. The satellites talk to each other in orbit, and somehow the technology works flawlessly. Starlink has exploded to over 10 million active, paying subscribers spread across roughly 150 different countries. And in the year 2025, Starlink alone brought in a massive $11.4 billion in revenue, which represents roughly 61% of SpaceX's total combined revenue for the entire year. But Starlink's insane ability to generate top-line revenue is not even the most impressive part of the story. It is the underlying financial efficiency that blows my mind as an investor. Just 2 years ago, Starlink's profit margins were hovering around 41%, but this year, those margins have skyrocketed to 63%, which means Starlink managed to add over 20 points in margin expansion in just 24 months. The margins are not just good, they are actively accelerating at an unprecedented pace. And Starlink is not just selling internet to rural families either. There is a highly profitable maritime version that global shipping vessels and luxury yachts use, an aviation version that major commercial airlines are rolling out right now, and a highly classified defense version called Starshield that holds massive contracts with the National Reconnaissance Office and the Pentagon. So when you strip away the hype, this is the real raw SpaceX. It is a satellite internet provider that absolutely prints cash, a rocket business that is doing pretty well but is currently valued like it has already fully colonized Mars, and an AI lab that is actively lighting roughly $1 billion a month on fire. In 2025, Starlink and the rocket business combined brought in roughly $8 billion in real operational profits, which would be fantastic news until you remember that XAI showed up to completely ruin the party, because the consolidated corporate entity of SpaceX, which now includes the massive cash burn of XAI, ended up losing nearly $5 billion last year on roughly $18.5 billion in total revenue. So, let us circle right back to the urgent question we asked at the very beginning of this chat. Who on earth is buying SpaceX at a $1.75 trillion valuation when the math clearly shows it is a massive net loser of cash? The answer is still you, and this is exactly where the real terrifying story of the SpaceX IPO actually hides. It is not about the cool rockets. It is not about the magic satellites in space. It is about the global financial architecture quietly changing its fundamental rules right before the biggest public listing in market history. On May 1st of this year, NASDAQ officially adopted a brand new mechanism called the Fast Entry Rule, and with SpaceX publicly targeting a June date for their initial public offering, the precise timing of this rule change is incredibly convenient for insiders. But before we dive into how the system rolled out the red carpet to siphon money from your portfolio, let us take a quick second to talk about how I actually managed to research and produce these deep dives without losing my mind, because today's video is proudly sponsored by Whisperflow. Whisperflow is an absolute game changer. It is voice-to-text software that actually works flawlessly, and it has completely transformed how I handle everything on my computer. If you have been following my recent scripts and videos, you know I have been doing an immense amount of deep research into macroeconomics, global debt, and the shifting dynamics of the financial system. Each one of these videos requires over 20 hours of intense research where I have to sift through endless economic charts, boring government filings, academic papers, and financial spreadsheets. Honestly, the heavy reading is something I can handle, but the endless note-taking, copying data, and typing outlines out manually on a keyboard is what absolutely kills my productivity. Whisperflow completely fixed that pain point for me. Their voice-to-text engine is 4 times faster than traditional typing, so I am instantly getting hours of my life back on every single piece of content I create. It works completely seamlessly across any application on any device, whether I am on my phone or sitting at my desktop computer. With Whisperflow, I do not have to stop what I am doing. I just switch tabs and start talking naturally. For example, when I am analyzing central bank data, I can just speak my thoughts aloud, like noting how the Saudi Central Bank's assets under management are suddenly diverging from OPEC oil prices, or how the Saudi rial has been tightly pegged to the US dollar for almost 40 years now, while the dollar remains on one side of 89% of all global foreign exchange transactions. If you use standard built-in voice typing tools, they make endless typos, miss numbers, and create a giant wall of messy text that takes forever to clean up.